Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was a bit of a drag day of trading in New York, where most of the majors drifted sideways, if not a little bit, with a little bit of advance against the U.S. dollar. The FOMC meeting was a non-event, as we did have the introduction of the $40 billion a month mortgage-backed security program just at the last meeting. Heading into tonight's trading, well, shortly in 10 minutes, we're going to have the release of the New Zealand rate decision, which could shift the markets in early Asian trading. But more so, I'm going to focus on what we could see heading into Europe and in late Asian trading, well, with the Tokyo Open. The first pair I want to take a look at is the USDCAD. The USDCAD has been quite range bound over the last few trading days, and currently is testing once again the top of its resistance zone, which currently comes in at the 0.382 fib at 99.43, and there's also support, I guess, basically at the 0.9950, or you could say the 0.9973 level. If we get a break of what I'll be watching for is if we get a break of the 0.9973 level, we could see a push higher, and I wouldn't expect parity to be the level that would cause the most difficulty getting above. More likely we could probably slide right through parity, and the level that we could target if with a break higher would be the 1.0039 level, which is the 50 fib from the larger move down. Let's take a look on a daily chart. It's the 50 fib for the move down that goes all the way back to last May. And it would be quite, this level could definitely cost a little bit. Sellers could enter the market at this level, and so that's what we're going to have our eyes on heading into tonight's trading. Next pair I want to take a look at is the Great Britain Pound USD cross. Just because the pound has basically moved down lower to test the 50 fib earlier in the week, and now has had quite a bounce from that level. It's up almost 110 pips from the 1.59 level, and is once again above the 0.382 fib at 160. It has been battling these fib levels. What'll be interesting watching in near-term trading is if see if we can get a break above the short-term price resistance level at 160.50, and we also have the descending trend line that has priced the cap price action for the last year or so. But this in recent trading hasn't had much of an effect on the pair, and we can see that there's the trend line, but I'm going to actually almost consider that trend line null and void at this moment. I'm going to remove it from the chart altogether. I'm going to remove it twice from the chart. Remove it from the chart, and what we're going to do is we're going to remove it 3 times from the chart. I really like that trend line. Now, what we can see now is the pair appears to be in a downward sloping channel. I mean, this could just be the beginning of a more significant, slower, gradual move higher. It's going to take a break of the 160.50 level, and you can see we have significant resistance up here around 161.30, 161.40. If we break that level, that would significantly change my theory that we may be in the beginning stages of a downward sloping channel. But if we do bounce back at that level, or even bounce at the 160.50 level, the first level of resistance obviously would be the same fib levels we've been playing out, which is the 60 fib followed by the 160 followed by the 50 fib at 159. The last pair we're going to take a look at, because data is coming out very soon and we may get a reaction in this pair. In the short term, the cross, you can see, has been sitting right at the bottom of its range, which is currently resting right around below the 50 fib, but right around the 181.10. Let's just say the 181 level. If we get a significant break of the 0.81 level, we could see a test of the 0.618 fib. That's the level I would really be watching. And if we break below that, we could be on the move. Could be on a more significant move lower down to the 80, and then it can even go further down to the 79.10 level. Now, heading into the news, if we see a break the other way above the 0.382 fib level, which comes in around 81.84, we could be on our way to a larger move higher. But before I would really get excited about any moves or corrections in the pair, I would have to see a break of the 82.35 level. 35 level. So basically in the near term, I can see a range between 82.35 and the 81 level, and we're going to need to break either side of this range before we can see a significant move in the cards. So watch the news and see if we get a push down to those levels, and it could be an opportunity just to go long or short, looking for more consolidation in the near future. All right, this is Chris Keene, and this is a Keene Point of View, and this has been Currency Watch. Remember to keep your trades keen and to play it safe.